In today's video, guys, I'm going to give you a simple momentum trading strategy for Forex, stocks, cryptocurrency, whatever you like. Today, we're going to get into it right now. So I've lined up three exponential moving averages here on the charts. You can see the 9 period, the 20 period, and the 50, and they're lined up accordingly right here. So we just talked about that we're going to be looking at a momentum trading strategy. And typically when you have momentum in a market, you'll see moving averages lining up nicely. And in fact, right here, we see that all three moving averages are lined up nicely to form this strong overall push to the upside. You can see the 9 period on top, the 20 period there, and the 50. So what's the overall strategy here? What's the concept? Well, in this momentum, we're going to be looking for good opportunities to get in on a pullback overall on the in the context of a strong market move to the upside. So when looking at this market, what you can see is that we have a nice series of pushes to the upside, pullbacks, right? Continuation, pullback, continuation, pullback, right? So that's what we're looking at here on the charts. What we're going to do, what I like about this strategy is that we can get in on a nice pullback using that 20 period EMA. Now, it doesn't really necessarily matter that your moving averages are the exact same as mine, but these are just the ones that I chose today and the ones that I like for this concept of momentum trading. So what we're going to do is when we have a pullback off of this trend, you can see overall the market's pushing to the upside, right? And we have a pullback, a minor counter trend to pull back to this 50 period, the 20 period EMA, right? This is going to be a potential opportunity to get long. And what are we going to do? Where are we going to set a target? Where are we going to set a stop? All of that stuff is important to consider when taking a trade, right? So this could be our entry. We could enter along this 20 period EMA. So what we could do for a target is we could use the recent high as our overall target, right? So if we get a continuation up to that high once more, that's going to be where we take profits off the table. And what we could do is we could set ourselves up with a 2-to-1. Now, I know that's not perfect, so let's take a look at it on TradingView. If we use our fancy, where is that? I can never find this. Here it is. The long position tool, right? So we've had a pullback to this level. What we could do is we could identify that here's the recent high, right? And if I clean this up just a little bit, pull this back over, we could set ourselves a 2-to-1 risk. The cool thing about TradingView is it has this tool. Again, it's called the long positions tool over on the left, and you can drag to see where your 2-to-1 ratio would be. So you can see it should say right about there. So our risk to reward ratio is 2-to-1, right? So our reward is 2 where we're risking 1. So we could set a stop beneath that structural level of momentum. Now remember, guys, when we're trading momentum, it's important to use a relatively tight stop because we're looking for that market to continue. And if it does not continue right away, we're not interested in the trade. So with this trading setup, you can see overall we had a nice target hit where we got into the trade right there. Now the next thing is we're going to see another opportunity here right over here. So there is our trading strategy setup. Again, we get our long position tool out. We say, okay, it's hit that 20 period moving EMA, right? So good chance that we see a continuation. Now this one is a little bit smaller of a target. You can see there's our recent structure high, right? So we identify, we look left, we see, hey, there's the momentum, where the momentum stopped last time. It's a good chance that if this market continues upwards that we're going to test and hit that high again, right? So we get our tool here, we identify that that's our recent high, we set our target, and we set a stop at a 2-to-1. You can see there's our 2-to-1, pretty close to it, right? And you can see that we had a continuation. Now it's not going to work perfectly, and sometimes you're even going to get stopped out on a trade that would have actually been a winner, and that's kind of the price to pay when looking at a strategy like this, right? When you're using a stop loss to manage your risk, a lot of times you're going to get stopped out, you're going to get whipped out, and that's how markets work, unfortunately. So if we get our 2-to-1, you can see, did we get stopped out? We didn't quite, we just barely escaped the stop loss there before continuing up and hitting another profit. But here, you can see right here, we had another pullback to that structural level, and we did not work out here. So you can see we put a stop loss there, and we set our target there. We set a stop at 2-to-1. And you can see there's our 2-to-1, and we got stopped out there. So one loser for that exchange there, and I think we had two or three winners in there for the long side. So that would have been overall a very nice trend. Now here's the thing. Sometimes you're going to get markets that are choppier. You're going to have markets that are moving back and forth and stopping you out a good bit. And that's also going to be part of it. But that's where it comes into play about choosing the correct market to actually trade a strategy like this. It's a very simple strategy, but you need to make sure that you're paying attention to the right market. You can see we had some continuation here. This would have been a failed stop out, right? You had all of our moving averages lined up. We would have entered there. We would have gotten stopped out. And then we had a sell trend come in, and we may have been stopped out on this. Let's see if we draw our stop loss there. We identify there's our previous low. Let's see if we get our 2-to-1 lined up. And this one looks like we actually made a profit here. Nice as well. So there's our 2-to-1. And overall, we didn't get stopped out, and we actually rode the momentum downwards again. So the whole concept here, the whole idea of the trading strategy overall, guys, is to take advantage of the fact that oftentimes markets will give you some momentum pushes both on the intraday and the longer term swing trade basis. Here we're looking at the 4-hour, but this could be applicable to the 1 hour, the 30-minute, the daily, whatever you really like. We're looking to purely take advantage of the fact that markets and momentum can create some really great trading opportunities on a pullback. And again, so there's some great markets that you could use here. You could use gold, XAU USD, you could use the pound dollar, you could use the pound yen, dollar yen, right? All the ones that tend to trend can give you some great trading opportunities as long as it's a market that's overall trading in momentum. You could get in on a great pullback and take some great trades there.